Friday, March 17th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's just before midday London time or 8 a.m. Eastern Standard Time in the US. And yeah, the markets are fairly calm this morning so far. The precious metals are a little firmer. Gold is just traded above 1230. We're at 1230.60 right now. That's spot gold, up $4. Silver is up 7 cents at $17.39. The Dow futures is up 10 at 20,938. S&P up 3/4 of a point at 2381. The FTSE 100 in the UK. I listened to the radio this morning, LBC radio here in the UK, and the guy that comes on, David Buick from one of the brokers in London. He's an older guy. He's been around a lot. He knows his stuff. But he was saying, oh, we reached a milestone yesterday. The FTSE traded above 7,400. Yes, that's true. But I remember the FTSE almost hit 7,000 back in the year 2000, so 17 years ago. And since then, the pound has devalued a lot. So I'm not really sure it is a milestone. I know nominally it's doing well. But, our currency and inflation has eaten away at the purchasing power of the pound. So that 7,400, yeah, it's a nice number. But to me, it doesn't mean anything. Gold was around 190 pounds back then in 2000, 200 pounds an ounce. And now it's just under 1,000. So gold has performed better as a place to park your money in the UK. And of course, houses have done better as well, a lot better than the FTSE. And what else? Well, currencies. Sterling unchanged, the pound 123.55. The euro is a little weaker, it's down 1/3%, 107.40. Late yesterday, the euro rallied against the dollar because there's talk that the ECB is going to hike rates soon, even though they're still doing QE. There's also talk that the Mario Draghi, the ECB president right now, the Italian president of the ECB, might be replaced with Jens Weidmann, who's the head of the Bundesbank, or the president of the Bundesbank, which is the German central bank. And the German central bank has a reputation of being very hawkish, of being a sound money advocate. I'm not sure, they're happy at all with the policy of Mario Draghi of QE and negative interest rates. That's something they try to fight, but they couldn't. So the fact that there's talk that Jens Weidmann might replace Mario Draghi as ECB president, yeah, that could help the euro a bit. The dollar's a bit weaker against the yen, down 1/5%. So dollar index as a whole not really moving too much. There's a lot of surprise, about what happened on Wednesday. The Fed hiked interest rates, and people said, wow, how come, treasuries rallied, the dollar dropped, gold went up. It was supposed to be the other way around. Well, there's an old adage in the markets, and I worked in the markets for over 20 years, as a salesperson or broker in the bond markets. I started out as a junior private banker in Geneva. The old adage is that you buy the rumor and you sell the fact, or the other way around, you sell the fact and you buy the rumor. So it was completely priced in already, this hike. And the other thing that I've heard and read that people are talking about in the markets is that the feeling that Janet Yellen gave at the press conference, and the feeling that people get from the Fed, is that when push comes to shove, if the stock market starts dumping, they will, you know, they won't rein in the liquidity, and they will actually be accommodative again and start cutting or doing QE. So people are losing, the markets are kind of losing credibility, you know, in the Fed. The Fed's losing credibility. The Fed's never had credibility with me. You know, all their comments, all the press conferences, you know, their dot charts and their forecasts, they've all been wrong, and they've, you know, I think they're just trying to play a game to keep things going, you know, and people are starting, you know, the mainstream economists, mainstream financial media, mainstream investors, they're starting to question, you know, what's going on here. It's been, you know, over 10 years since you really hiked aggressively, and, you know, you've kept rates basically at zero since 2008, and our economy is supposed to be doing well according to you and your statistics, and according to what you tell us, you know, low unemployment, low inflation, you know. But what I think is happening is that they've created the Fed and the mainstream financial institutions, media. They've created this world, their own world, where unemployment is low, 4.7%, where the economy is doing really well, where there's no inflation, everything's fine. And they've forgotten that there's a whole other world out there, the real world. And it's probably catching up with them. So very confusing, I think. So, gold bottomed just below the 1200 this week before the Fed, and earlier this week. And I think last week as well we got there. And now it's 1230. 1220 about a month or so ago used to be a big resistance. And we're staying above that level. I guess now the next target is going to be the 1245 to 1250. Silver as well, 1750. We got up to 1753, I think, yesterday before coming off when the U.S. came in. So that's what's going on. What else? Cryptocurrencies are pretty wild. Bitcoin has dropped, about $100 from a couple of days ago or so. It's 1148 right now. Not surprising. I think longer term Bitcoin will still do well. I wouldn't bet the house on it, but I try to stack, so to speak, as many Satoshis. One Bitcoin, of course, is very expensive, but you can buy fractions of it. Ethereum, the other day I said, go along Ethereum versus Bitcoin. That, of course, has worked really well because Ethereum now is at $45. It got up even above $50. I suspect Ethereum is getting a little bit frothy here, and I wouldn't be surprised if we drop back below 30 sometime. I'm not saying it couldn't go back up to 50, and I'm not advising people to do anything. I bought a little bit of Ethereum last summer around 14. I bought some at 20 last week, I think, or the week before. And I got out most of my Ethereum just above 30, and I bought Bitcoin with it. I know I've lost, I didn't ride it to 50, but I still did fairly well. You can't pick the exact top or bottom. And anyway, this is what I'm doing. I'm not advising anyone to do anything. In terms of other things, I see that there's a G20 finance ministers meeting this week going on in Baden, southern Germany. And one of the comments from Mark Carney, who's the governor of the Bank of England, is he says G20 must complete financial reforms. I mean, these guys, you know, they've been saying this for the last, you know, since 2008, and they never do it. The problem with the reforms, political reforms of the financial system, is that the banks basically run, they run politics in the US and the UK. Jim Rickards said he was in a meeting with Treasury officials at the US Treasury, and they're talking about reforms. And he actually told the guy that was speaking from the Treasury, he said, but you guys are owned by Wall Street. And he thought the guy might get angry with him, and he actually said, you're right. They own us. So there is talk. I saw an article yesterday. There is talk that Trump might want to bring back some kind of Glass-Steagall where investment banking and commercial banking is separated, but I wouldn't hold my breath. What else? You know, there is, of course, there's been a lot of people predicting collapse of the system for the last few years, and the system keeps going. One of my viewers sent me an interesting video from a YouTuber, and I think, let's have a look here. His name is Texas Shrugged, I think. Let's, yeah, Texas Shrugged. Let me just have a look. Yeah, Texas Shrugged Book. That's his YouTube video. And this guy makes an interesting video about all the people on YouTube who, you know, the alternative economic people, you know, like Jim Rickards, Peter Schiff, Jim Willey, even myself to some extent. I've been saying, you know, the system can't survive like this, and the system keeps going. And this guy is saying, you know, he thinks that they've got like formulas and big computers at the Treasury and the Fed, and they keep pumping the cash clandestinely, you know, into the system, into companies, just to keep them going. That might be true, but I don't think, yeah, these things, these kind of manipulations of the system can keep going for a long time, but I don't think they can last forever. I don't know what, you know, I can't predict anything, and I don't think people should stop living and waiting for collapses and being scared. They should keep going with their lives, but at the same time, you know, be aware of the system and how corrupt and fragile it is, the financial system, and just keep doing things like, you know, buying physical gold, buying physical silver, having some cryptocurrencies, getting out of debt as much as possible, living within your means, you know, enjoying life as well, of course. So that's what I wanted to talk about. Yeah, as I leave here, gold is at 1231, silver 1738, and there's some numbers out today. Industrial production capacity utilization in the States, probably in about an hour. Actually, it's it's actually in about 15 minutes. So that might have a little impact on the markets. The G20 finance ministers meeting, don't think it's that important. So if you enjoyed this video, give me a thumbs up, share it far and wide. If you haven't subscribed to my channel yet, please do. And if you'd like to donate to my channel to help support my channel, there's some links below in the description. I accept Bitcoin, Ethereum. I've got a PayPal account as well, and Patreon. I'll talk to you later. Take care. Bye.